Yes, sir. Yes, sir. Oh, look at this. We got a fixed little guy right here. A little cowboy riding that bull. Yes, sir. Once again, here we are live. Like I said I would. Um, Trying to see what these markets are going to tell us tomorrow. Hopefully, trying to get ahead of the stock market by making a plan on whether the stock market tomorrow is telling us that it is going to be red, and so we look for a nice little edge. If that is in fact what it's going to do tomorrow, and if not, um, what do we do if we have some green? What do we do if our stocks are mooning tomorrow and they keep mooning since I guess everything is honky dory? Um, our economy is just fine. Everything is going to the moon, and they're going to start printing in limited amounts of money uh, like never before. So either way, doesn't matter what we feel personally about what the market is doing. The bottom line is that it's going up and we have to take advantage of that. So, how do we do so? And how do we position ourselves best so that we can keep making money? And at the end of the day, that's what matters. This is not personal. This is not, us just turning a blind eye to what's going on. It's just us trying to position ourselves and our families as best as we can so that we can um, do better for our families, right? And set ourselves up better for retirement or to make our lives a little easier. Anyways, we are here. Welcome, my fellow simpletons and degenerates. It is I, the Savage of Wall Street, once again. Here we are on a Sunday. And as you guys can see, I'm pretty happy because the 49ers won quite a nail biter. And Arizona was giving them a good game. It went down to the wire. However, there could only be one winner, and the Niners took it. So now they are atop of the NFC West, 3-0. They just beat a division rival, and so life is good. Um, Looking at what we have going here, as far as um, what uh, what the market is looking like for tomorrow, right? Let's look at international markets and see what we got going, my friends. Here we go. Here we go. Here we go. What am I doing? Oh, yeah. Let's see. Let's see. Let's see. Wall Street strategists say that stocks could, in fact, keep rising from records. Fed's Powell and Moran set to speak with stocks at record highs at the week ahead. And Sachs Global in talks to sell 49% stake in Bergdorf Goodman for about $1 billion. I mean, futures are looking kind of a little green, at least on the S&P and Dow. Russell 200, 2000, tiny bit green or red, and the VIX a little bit red. Gold is up almost a 1%. So mixed bag, right? Okay, fair enough. What do we do with this information? Well, personally, we know that SoFi is going to $30, right? It's scratching $30 at this point almost, and it'll be at an all-time high as well as a 52-week high. A lot of good news with SoFi. There's we haven't really heard from SoFi in the last 2-3 months, right? Any news. This is just the stock doing its own thing. This is just people realizing and waking up to the fact that SoFi is the real deal, and so the stock is appreciating. We did have a 52-week low of around $9, $8.90 or something like that in April. It has recovered since then, and is now scratching $30. So what do we do with this information, right? I hear a lot of people are getting now very, very happy and restless. They want the stock to go to 40 and 50, and they're literally saying the stock is going to $40. They're betting their balls on that, right? In December. Could the stock go to 40? It could. It very well could. It's already ran from $9 in April to 30 almost now. So that's quite a bit. Even if SoFi was to do nothing for the rest of the year, I think that it's done enough, right? Now, what do I think? What personally am I going to do? Well, I've been saying it. $35 covered calls, January strikes, not the worst thing in the world. Say that the stock goes for $40, right? Let's just say, for argument's sake, the stock is at $40 in January. Fair enough. You sold a $35 covered call. You got $3 for it. Essentially, you're at $38, right? Okay. There's this thing called a rollover that you can do. And you can roll your $35 strikes to $40 strikes in June, right? And take in even more premium. So say you get another $1, $1.50, $2 to roll those 35s to 40s out to June. So now, you're not selling for 35, you're rolling to 40. You're sitting pretty. So you don't have to, think that you lost your stock at 35. You could always roll over, man. But what if it does not? What if the stock goes to 33, 34, 35, right? And then it comes down to 28 again for whatever reasons, right? You sell some $35 cover calls. You bring in $3 a share, right? For the contract, that's $300. You do 10 of those, that's $3,000. And let's say in January, the stock is at $32, $31. Guess what? Those contracts die worthless. And you have made some money. You use that money so that you can pay down your mortgage. You could pay your rent. You could pay your bills, your car note, a myriad of things that you can do with that money now. You don't have to wait, because we don't know what's going to happen in the future. We're taking advantage of it now. So that's kind of my argument. Now, here's another one. Do you think that SoFi is going to $40 a share? You're betting your balls on it. Fair enough. Why don't you put your money where your mouth is? Why don't you take $4,000? And this is not financial advice. This is me just saying, if I was to take that stance, which I'm going to myself, I'm going to basically say I'm very bullish on SoFi. SoFi is actually going to 50 in 2027. And I'm willing to put my money where my mouth is and sell some $40 cash secure puts out to January 2028. And I'll bring in close to $20 per contract. What does that mean? Well, that means that I'm putting $4,000 away, right, in an account with Charles Schwab, with Webull, and Robinhood. I'm going to put $4,000 away, and I'm going to tell these guys, look, I'm very bullish on SoFi. I'm willing to put my money where my mouth is. I'm giving you $4,000 so that I can buy in 2028, in January, I can buy SoFi at $40 a share. But I'm not going to do that for free. I believe in this company so much that I'm willing to give you $4,000 for 100 shares, but I want $20 back right now. Right now, for me having, this bullish outlook and me saying SoFi is at least $40 a share, I'm willing to bet that. This is me putting my money where my mouth is. Give me $20, per share. So $4,000, actually, I'm getting $2,000 back. That's what I'm asking for. So I'm risking $2,000. Now, see, that's the thing. That's where you get paid on both sides from this. You don't have to be either or. If you really are bullish on SoFi, and you know that I am, since I have a really big stake on that, right? I'm willing to say, yeah, I've sold my covered calls. I'm okay getting them taken away at whatever strike points I've chosen, right? But I'm also okay buying it at $40 in 2028. And here's where it gets awesome. If I decide that, I'm going to do this through Charles Schwab, there's an ETF that I have my money in. I'm going to get 5% back every year that my money's in there, right? So if I sell for $20, these covered calls, that's like I'm getting 50% back. But don't forget, Charles Schwab gives me 5%, so I'm realistically getting 55% back on that money. What bank is going to give me that? And the beautiful thing about this is that I believe in SoFi so much, I know I'm not going to have to keep those until expiry. I could easily buy those back as soon as SoFi touches $45, $50 a share. Those are going to be worth like 60%, 40% less, 50, 60% less. And this is going to be in the next 6 months, maybe a year. I don't have to wait 2 years and change, right? I could buy back, at 70%, and then I don't have to wait another year and change for the 30%. I could just buy back and make money. And then I'll take my money back and I'll use it in some other way. That's how you mitigate risk, my friend. So anyway, so who do we got here? Kent's mom is in the house. How you doing, Kent's mom? I hope you're doing well. Jude K is in the house saying, hey, Savage and all. Tom Kaufman, Savage, happy Sunday. Happy Sunday indeed, my friends. Tom Kaufman saying open is down pre-market. Might be good to sell some cash gear puts. What's up, Savage? Jared saying from Cincinnati. Jared saying SoFi is mooning. It's rockets, and then I agree. Welcome from San Francisco, California, my friends. Wherever you in the world you are, I bid you the best of Sundays. I hope you guys are doing great. I hope you guys have had a nice and relaxing weekend. What are we doing right now? We're getting ready for tomorrow. Although I won't be, going live tomorrow morning because I have to do some stuff with my little ones. Got to go to the doctor. I'll be here in spirit, and I'll be trading. I'll just be at the doctor's office, while they run some tests on my son. But the point is that I'm taking in some new positions. And I think I may have talked to you about the position that I took in this past Friday. I took a position on Bmnr. It was a $55 cash secure put, and it's expiring November. And I took in, I think, like $1,010, so like $10.10 for it. And so I am very bullish on it, and I will tell you guys why. All right, let me share this with you guys real quick. And this is not me telling you, you need to get on this. It's not me telling you guys that it's something you need to invest in. It's just me being transparent and me telling you guys what I'm looking at. And if you guys decide to do your own UD, which I recommend for sure, and look at the bullish case for it that I've looked at. It makes sense. And this is this could be a moneymaker, especially because they're trying to take the same approach that MicroStrategy took with Bitcoin, and they're doing that for Ethereum. Look at MicroStrategy. It's mooning. It's going to the moon. And the more expensive that Bitcoin becomes, the more expensive MicroStrategy is. And this is going to be basically the same thing. It's just something that just went online. It IPO'd, and so here is my key bullish arguments for Bitmining Merchant Technologies. Bmnr is a ticker, and it's centered on its unique position as a major Ethereum treasury and its technology-driven mining operations. This strategy provides investors with leverage exposure to Ethereum's potential growth, attracting significant interest from both Wall Street and high-profile investors. Now, this doesn't mean that they only hold Ethereum. They have a lot of cash on hand, well over $1 billion. Maybe short of $1 billion. But they do hold other assets. I believe they hold Tesla. I believe they hold Apple. They hold they hold some really good stocks. So it just so happens that they want to be like they want to be like the micro strategy of Bitcoin or Ethereum at least. And they want to hold a majority of Ethereum. Now check it out. Strategic Ethereum treasury model. Leverage Ethereum play. Bmnr has pivoted its core strategy to aggressively accumulate Ethereum, positioning itself as a publicly traded vehicle for investors to gain leverage exposure to Ethereum price movements. Large growing Ethereum holdings. Following MicroStrategy's playbook with Bitcoin, Bmnr has rapidly grown into the world's largest corporate Ethereum treasury. As of mid-September 2025, the company held over 2.15 million Ethereum, valued at nearly $10 billion. Its stated ambition, is to acquire 5% of all Ethereum in circulation, staking and DeFi integration. As an Ethereum treasury, Bmnr can generate staking rewards and integrate with decentralized finance or DeFi protocols, potentially outperforming a simple directing holding of Ethereum. Operational and technological advances. Dual business model. Bmnr's unique model combines Ethereum treasury strategy with traditional Bitcoin mining operations. This provides a balance between long-term value creation from Ethereum accumulation and a source of operational revenue from mining. Immersion cooling technology. The company's use of immersion cooling for its mining hardware offers several competitive advantages over traditional air-cooled setups. Higher performance allows for safe overclocking of hardware, boosting hash rates by 25 to 30%. Lower cost provides up to 40% lower energy consumption, reducing operational expenses and supporting reinvestment into Ethereum accumulation. Improve sustainability, reduce power usage, and near silent operation make these mining sites more environmentally friendly. Strong investor sentiment and institutional backing. Smart money accumulation. Recent 13F disclosures indicate that the hedge funds and other institutional investors have been accumulating Bmnr shares. Noted investors like Peter Thiel, who's the main guy at Palantir, Stanley Druckenmiller, hold significant positions, signaling institutional confidence. High-profile leadership. Chairman Tom Lee of Fundstrat provides significant credibility and market attention. He is a prominent Wall Street strategist who has publicly expressed a bullish long-term outlook over Ethereum. Now, this is one of the guys that I am usually opposing. Tom Lee is a permabull. You guys know I'm a bear. But the guy makes an amazing case for Bmnr. And after seeing, his presentation, after seeing all the data, one of the things that you have to do when you're an investor is you have to be okay knowing that you don't have all the information. You have to be okay saying, I am wrong. And you have to then be okay sometimes saying, you know what, I'm wrong. This person is right. They make a very good case based on this data. I'm going to look at that a lot closer. And then changing your strategy. There's absolutely nothing wrong with that. There's a little more that you guys can look into, right? You guys can YouTube Tom Lee. You guys can look at the case for Bmnr, and you guys can get definitely in the game. But one of the things that I was looking at Bmnr is just the volatility of it, right? And I really wanted to get in at 40 and 50, but it just got away from me. Also, there was just so much going on with everything else. My wife actually said to me this past week that she really likes the way that I'm managing her portfolio and part of her 401k. So she's going to take another $100,000 from her 401k and she's going to divert it over to Charles Schwab, and I'm going to have a little more to play with now, an extra 100K. So I'm just being, as conservative as possible, but I also have to think, that I want to be a little bit more aggressive than in the past, because you know, sometimes you have to take a little chance, right? And I think that most of the portfolio is in a really good place, and it's very, very conservative. Conservative, and on this one, I think I'm going to take a little bit of more of a cavalier approach by still going through cash secure puts, right? But now dipping my toes into crypto. One of the people that will tell you, I'm one of the original naysayers for crypto. I would always say it's backed by nothing. It makes no sense. But now the government is backing it. Right now, all these banks are now starting to take positions. They're actually now starting to take crypto, and it's a thing. It is a form of it is in finance now. It's a form of payment. It's pegged to to a lot of countries' economies, right? And those countries are pegged to the dollar. So I'm now changing my strategy, and I'm going to take more of a cavalier approach, and start getting into Ethereum, through and MicroStrategy through cash secure puts. Now, this is the thing. So if you look at the $55 cash secure put expiring, in November for Bmnr, you'll see that there was some cash secure puts that were sold on Friday. Some were for, I think, 10.25 was the highest. Mine was 10.10. Maybe if you'd like to see how it moves and how these play out, that would be a good one to look at, right? I think that the fair market value for Bmnr at this point is $61, I believe. So going in through a $55 cash secure put that I got paid $10 for puts me at 45. That's a 25% discount. If for whatever reasons it happens to be there in November, great. I just got a stock that I was looking to buy for $45 instead of paying $61, $66, $70 like other people. And that's exactly how I'm starting my position here. Now I'm looking to do some more cash secure puts like that. I'm going to try to get some $11 if there's some weakness this week on Bmnr, and I'm trying to do 6 cash secure puts, 6 $55 cash secure puts, so that I can bring in $6,000. Why am I doing that? Why Savage? Why 6? Why not 7? Why not 8? Why not 4? Why not 5? Well, let me tell you why. Because the fair market value for MNSR is $61, right? If I do 6, cash secure puts that are $10, to $11, I'm kind of like at $6,000 in change, right? That's enough for 100 shares. I will go at market price, and I'll then get the shares. Worst case scenario, the stock is at 50, $47, $45 in November, and I get the shares, in which case I will now have 600 shares of MNSR. Okay. Best case scenario, and this is what's more likely, the shares are going to be around $65, $70 in November, and I will get my collateral back, right? And then I'll have 100 shares that I bought with those cash secure puts. And then I can sell $70 cash secure puts out to like February or March, and then use that premium to buy 100 more. Because the way that I was working the numbers and running to some AI models, MNSR, it could very well go to $90, $100 a share in the next 3-4 months. And so if that rings true, then I would love to start my exposure then. And in some of those scenarios, let's say Ethereum was to go to like $12,000, $13,000 a share, I'm looking at a $500, $600 a share deal with a Bmnr. That is not terrible, my friends. Okay, so that's one of the positions that I'm taking. Tom Coughlin saying open down pre-market, be good to sell some cash secure puts. Tom, so when it comes to open, yeah, I told you guys not to chase it on Friday. I told you guys last week when it went to $8, I think, eight something. I said do some $7 cash secure puts, some $8 cash secure puts. Try to bring in $200, or $2 per contract. That would have been a good position to be in for the October strikes. And no, sorry, the November strikes. Now that's getting smaller because time is advancing. We just lost another week and a half since that since it went down to that price level. But look, the most amount of calls or puts that I saw on Open Door that expired last week was, I think, like 103,000. The $9 cash secure puts, right? So I think that I told you guys this shit is going. They're not gonna let it get to like above 10, but nine was realistic. Even 850, and I was like, that's gonna be a ridiculous amount of shares. I don't know if they will, but yeah, 9 was possible. Now that those are gone, you have to look at the chain, right, and see in the future where Open Door is looking at, right? What's it looking like? Go to October, right? Go to the third Friday of October because that's probably what's going to have the most volume and open interest, right? See how many dancers on the floor there is, and then look at November. See which one has more. Look at $7 strikes. Look at 8, 850, 9, 950, 10. See where the most volume is. And I assure you that wherever the most volume is, that's going to be the one that's going to be, maximum pain, right? So that's kind of, your homework to do, right? I have my positions. I got several thousands of shares already. I sold several thousands of shares already, and I have some covered calls. So I'm good. Now it's time for you to get paid. I think Open's going to go to 20. Open Door is going to go to 20. It's squeezing. It's still squeezing, and the shorts have not covered just yet, man. It's they got too greedy. They got too greedy, and they're going to have to pay the piper. But the thing is that what's going to happen, from now till then, right? I see it going to $6 again. That's exactly why I sold $8 cash secure puts, and I got over $2 for them, so that I can get it at $6, right? Because that's going to be like my break even. It's like 580, 590, pretty much $6, right? I'm totally okay with that. And then as soon as I get those shares, and it's going to go back up to 10, $11. Then I'll sell some covered calls for $12, $15 out, to like November, and try to bring in some premium, right? And hope that I get a sign and see what happens. Or I could go even on the money. I'll sell some 10s. If I get a sign at $6, that means that my break-even price was, $6. If I sell at 1,000, for 10, I'm making $400. What's wrong with that? I'm here to make money, right? I already bought Open at fucking 60, 70 cents a share. Like I'm not, like I already took the chance that everybody now is all happy to take, like I'm good. I watched my videos, 3-4 months ago. I was pounding the table. Fucking Open is at 60 cents. Just buy the damn stock, 70 cents. Buy the damn stock. $1. Go through cash secure puts, buy, I was like, do $1 cash secure puts, guys. Get paid 15, 20% for buying the stock. You would have gotten assigned those shares. And now you'd be fucking laughing your ass off. But look, it is what it is, right? You can't win them all. And, obviously I'm just some guy, on YouTube, just ranting and raving about some positions that he sees and saying, hey guys, this looks interesting. I'm not a financial advisor. I'm not telling you what to do. I'm just saying, like this looks interesting. I'd like to take a position on it, and I'm pretty open. Like this is what I'm investing in. And I tell everybody that I talk about, everybody that watches this channel knows that every single stock that I talk about I own. 99% of the stocks I talk about, I own, unless someone asks me about a specific stock, that I haven't looked at, and maybe we go into like a little dive and look at what it is, and then I tell people, well, based on this information, I may not know anything, but like the premiums look kind of good, and it looks like it's close to a 52-week low. Why not go through a cash secure put? And if you own the stock, sell some covered calls when it runs 10-15% in a day. That's it. Beach Boys in the house. Great. Got a personal alert. Thanks, Savage. No doubt, Beach Boy. I hope you're doing well. I hope you're listening about BMNSR, man. BMNR. I mean, because I took a position, right, and I think it's a good one, man. I think I missed the whole bull run on Bitcoin. I'm always gonna kick myself in the ass for that one. But now I'm looking at at Ethereum, because I bought Ethereum when it was like $200 per coin, right? But I sold at like $1,000 because at that point, it was so brand new, and this was like 2016, 2018, something like that. And I was just like, I was happy, it's like, this is like what, 10 years ago almost, right? So I was just like, holy shit, this is real. I'm gonna take my money and run. I'm a lot more of a savvy investor now, and I do covered calls and cash secure puts now. Back then, I was just buying low, selling high. That's the name of the game. That's what they teach you, right? This shit, they don't teach you this in high school. Covered calls, cash secure puts, right? They don't tell you about short squeezings. Nobody. I'd love to be a teacher in high school and teach kids about GME and what's going on with the warrants. This is a gold mine right now. People are sitting in a gold mine, especially when the warrants. Well, first of all, they're going to have to, they got till October 3rd, right? But once October 3rd happens, right, then people are like, okay, these are how many warrants we have to come up with. Well, they got to then buy the warrants, right? They're going to have to come up with the warrants. Now they know how many, but now they're going to be like, okay, so shit, we need to come up with, like, I don't know, let me say for an arbitrary number, 50 million warrants, right? And so they're fucked. The shorts played. They picked around and found out, and now they're gonna have to cover somehow, some way. They can't create synthetic warrants, so it's gonna be very interesting. I have not written anything on GME. I'm just holding the bag on GME. I bought back my covered calls. I think that the day before earnings, and I had sold some $23 cover calls expiring, I think, last week, the 19th, and I just bought them back. I made I think I was up like 40% at a point, and then we came out with these news, the warrants, and I was like, shit, yeah, I got to buy them back because we had earnings, and I'm doing nothing. I'm not gonna sell covered calls right now. I'm on cash secure puts on GME. I have $30 cash secure puts that are expiring next month, October the 19th, I think, 17th or 19th. It's one of those, right? And I have some $30 cash secure puts expiring January. So we'll see how those end up. I got over $10 for those $30 GME ones, January ones, and then I got like $7 or six something for those $30 expiring in October. So we'll see what happens, man. I'm very excited to see how this turns out with GME. I'm very excited. So pre-market, right? Or not really pre-market, but let's see what's going on here. Well, stock market's mooning. I mean, yeah, I'm very, very interested to see how this happens. Sofi is 6 cents away from $30, guys. Ding, 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 ding. I love this. Has it touched $30 already? The 52-week high, guys. Yeah. It $29.95. We're 5 cents away from $30 on SoFi. God damn it. Remember when SoFi was $4.72, guys? You guys remember that? I don't know if you guys were around for that, but it was just like, those were the days. And, God, people were just saying it was a dead stock. It's going to get delisted. It's over. And then people like me decided to buy more, and we took a chance and said, you know what, this is why we bought this stock, so that we can add more. Like, we were buying at 12, at 18. Like, why wouldn't we buy at 4.50 and 4.75, $6, $7? Why? And this is why, because we saw this happening. Look at C3.ai is about to hit $18. I told you guys when it was 14 and change, this has no business down here. This stock belongs in the $19, $20 land, if there at all. It's really supposed to be 25 a share, but it's had a really bad, a very bad year between the CEO coming down with a disease, and just the overall market, right, just taking like a little downturn. And it doesn't help that Palantir has been killing it, right? And then they always compare Palantir and C3.ai, because C3.ai was actually taking contracts away from Palantir in the past, and now Palantir is just running away. But it just has to do with the fact that the CEO is in fact diseased, and he has always been so hands-on, and I think people just waited for him to make a move. He was not really making moves, and I think he knew that. So what did he do? He picked a really good guy that has actually started his own AI companies before. He sold them to Mark Benioff, and so I see C3.ai working with Salesforce, and I think that's going to be very interesting. So I'm just at this point I'm loading. I told you guys 1750 cash secure puts expire in January. Not a bad investment at all. Those 1750s at a point were like $4, 450. Those are down to like 230 now. You could have easily bought back now. If 3 weeks ago you'd have bought those, right now you could buy them for 50% profit. You didn't have to wait till January. You'd have bought them now for a 50% profit, 55% profit. What is wrong with that? Nothing at all. Now, I'm looking at 2027, January 2027, $20 cash secure puts. C3.ai is giving you $6 a share right now. You could ask for $6 a share. That's around roughly 30% on your investment, right? Something like that. Not the most terrible deal. Not the most sexiest, but if you're bullish on C3.ai, I don't see anything wrong with it. I would actually dare the market to put these shares to me. I would actually go and try to get a sign with some October 17th, 1750 cash secure puts. Try to get $1. Try to get $1 for those. I see nothing wrong with that at all. C3.ai will be $20 a share before long. And then it's all about, if you've held C3.ai before, you know how it is. It could go from 20 to 25 in a week, and then 25 to 35 the next week. That's what it does. That's when people go crazy and sell covered calls, bring in a lot of money, and they'll go back down another $4 or $5, and you buy back the covered calls and do cash secure puts, and then it goes back up, and you do more covered calls. That's how we pay the bills, my friends. So let's see what we got here. Beach Boys in the house. Karen D is in the house saying, "What's up? How you doing, Karen D?" Derek Brooks saying BBAI is bumping. I told you guys, those $7 cash secure puts expiring 2027, man. I was telling you those BBAI $7 cash secure puts, bringing you in 365, 375, 385. For those of you guys that did that, you got 60%, 55 to 60% back on your return on investment right off the bat. Right off the bat. And now you can just fold your arms and watch BBAI just tear. I took all that premium and I bought shares at stock price, and I think it was like around $4 and change. And so I've just been holding the stock. The stock's gonna go to 10. It's gonna go 10. So just if you've added shares, great. I'm not even trying to write some covered calls right now because I think it's got some room to go up. The day that it goes up 15-20%, and it's going up past 8, then I look at selling some 10s maybe. But at this point, I'm kind of I see it just breathing at this point down there and trying to rip past 8, right? And I think that's gonna be it's gonna be one of those that if it holds 8 for a week or two, that's a good sign. Moneymaker Juan is in the house saying good evening to all in here. What is up, my dude? Roaring Yeti's in the house. Did you start early? I always miss the stream. I did start a little early. I said I was gonna go in at 5 p.m. But I was watching the Niners game. They finished, and while I was watching the game, I was actually reading up on Bmnr, and I was actually looking and reading on Lululemon. That's going to be another stock that I am very curious to see how it holds up in the next quarter. So just putting it out there for you guys. Lululemon, the ticker is LULU. It's at a 52-week low almost, right? And what's my motto? My motto is if it's at a 52-week low and you can go through a cash secure put, not the most terrible thing, right? But it's kind of pricey. It's well over $100 a share right now, right? It was over $400 a share though, not too long ago. The tariffs, my friends, the tariffs are hitting, and people don't have as much discretionary spend, but that doesn't mean that there's no opportunity here, right? So I'm gonna start looking at it a little deeper. I'm gonna look a little closer at their financials. They just inked a deal and signed contracts with American Express. So that's not going to show, and that didn't show in this last quarter. That may start showing in the next quarter. My wife also shops there, and every time she goes, she just brought home some more clothes today, and it's just like they fucking sell pants for like really yoga pants for $110, but she also gets work pants from there. They have tops that are over $100. Everything's $100 there, I guess. I don't know, but it seems like those are extremely comfortable. I know they feel comfortable. They feel really smooth actually, because I happen to, don't ask me how I know, but every time I touch them, I'm like, ooh, these are very, very soft. Anyways, something to look at for you guys, right? Have a look at Lululemon, and you don't have to buy it. You don't have to do anything, but it's just something to put on your watch list, right? And see how it behaves. Nothing wrong with that, right? It's almost at a 52-week low right now. It was almost $500 a share. It's like at 100 something right now. So just saying, that's kind of like a 25% of what it was at its highest. Does it have some room to go down a little more? Maybe, but I don't know. I'm just, like I said, I have to look a little closer at the financials, and we'll see what happens, right? But these tariffs are weighing heavily. Discretionary spend is down, but the thing is that the people that Lululemon is geared towards, right? The market that they're trying to hit. It's not like somebody that's just living modest means per se, right? So their target audience is, people that are making $150,000 a year, maybe a little more. Kind of your working woman, right? And working men, because now they have men's apparel, and so the the target audience is being reached. And every time we go by Lululemon, it's a ridiculous amount of people in there, right? And we live in a nice area, and there's you can tell these people are not just some random yahoos off the street. These people probably have some really good high end paying jobs, and they're there to shop because they shop a lot. Because you see women, you know, it is not strange to see someone paying $4,000 or $5,000 and just bring like two little bags out, or maybe a bag out. It's crazy, but and they're very well run. Um, they have you have your own personal tailor there. If something doesn't fit right, they will tailor it, to your size right then and there too, which is crazy because if you gotta go to Macy's or you go to Nordstrom and you want to tailor something, it's like $125 in addition to what you're paying. So I mean, you get what you're paying for. Um, there's also like a special club, like if you pay like a little fee monthly, with Lululemon. You get like some perks. My wife knows about that crap, and so, but some of the perks are like, um, you take longer. If you want to return something, they take it, even after it's past like 3 months or something. I don't know. But the point is that it's a good business model. They hit their target audience, and the people that are making money, the type of people that their target audience are going to keep making money, even more now. Because I'm guessing the type of people that go into those stores usually probably have an investment account. And right now we're at 52-week highs on almost everything, and so I'm guessing, they're not going to miss an extra $1,000, $2,000. So they'll just keep shopping because it's a good store. It's a nice store. They like the brand. They like how it feels. And my wife, I mean, she says, "Oh my God, they're the most comfortable pants." So I mean, her friends, same thing. So I don't know. Near 52-week low. That's kind of where I strike, and I'm gonna just keep an eye on it now. So let's see here. What do we got? Roy Yuri's in the house. Jay Gill is saying good evening, and Cindy B is in the house saying, "Hey, Savage." All right. So let's see what we got going here, my friends. Guys, I'm gonna have to cut this short. I just got I got an alert from my daughter. I think she may be getting hacked, so I'm gonna have to see what's going on and what this is about. So again, the market tomorrow. If it's green, your stocks are green. Don't hesitate to write some covered calls. If for some reason are red and the stocks that you're looking at dip 5, 10, 15%, do not fear going through cash secure puts. New ticker alert, Bmnr. Look at bullish as well, BLSH. Keep an eye on Lululemon. And don't be scared to go and write $40 cash secure puts on Sofi. Those are my 2 cents. I am the Savage of Wall Street. Thank you for watching, my fellow simpletons and degenerates. I may see you guys tomorrow evening. If not, I'll see you guys on Tuesday. Until then, take care. Have a great day. Peace.